welcome to the YouTube channel. My name is Kaseem. Welcome to this week's portfolio update. In this week's portfolio update, we are going to go over the portfolio thoroughly. We're going to go over a few things because we have seen in the past week we have seen a roughly about a 6% decline in the market, but roughly about 2% decline for the portfolio here. We're gonna go over that, and we also have a lot of news that we need to go over this week. We're gonna touch on all of those. S&P 500 for Friday, as you can see, we had a huge decline in the morning of roughly about almost 10% here, about 3%, 3% of a 12-point decline, and then right away the market bounced right back and ended up the day being up, right? So, and let's look at the past 5 days. The past 5 days here, the S&P 500 has gone down to a point of 6%. So the general stock market, the top 500 companies in the US, they've gone down by 6% in 2 days. But if we zoom out a little bit and look at a 1 month view, for the past month, the S&P has been up 7%. If you look for the past 6 months, it has been up 60% in the past 6 months. And if you look at the past year, even if we include this pandemic times, because this was during the pandemic, in general, if we check here, it's been up 10% in the past year, including all the stuff that has happened with the coronavirus and everything else. In the past, if you look at the full year, it's been up in general. If you look at 5 years, it's been up in general. So when I go back to a situation like this, when I see a little decline in the market, I'm not worried. Matter of fact, I'm getting ready to start buying more stocks at this point, because if the market declines another 5%, roughly it would make it 10%. If the market declines 10%, I am a net buyer of stocks. I'm a net buyer of stocks, especially of companies that literally pay me and drop money into my portfolio every single day. Every single day. If we go here and check for the past 1 day, I didn't receive any payment on Friday. For the past week, so August 31st to September 5th, the portfolio has received $10. We've gotten paid $10.31. In the past month here, from August 5th to September 5th, the portfolio has generated $46 in income, and I don't have to do anything to get this money. This money gets deposited here, and then I use that money to put back into the portfolio to buy more stocks that are gonna pay me more money. This $46 gets reinvested back into the portfolio, and it goes out and earns some more money, right? So this is how I'm planning on building wealth. I'm not worried about a 10% decline in the stock market, a 5% decline in the stock market. Hey, I'm not even worried if the stock market goes down to the coronavirus levels, because this is where wealth is made in the market. When there's fire on the street, you buy some more. That's where you generate wealth. If I go back here to my portfolio here, we can see in the past 90 days the huge growth in the portfolio. I mean, I added my money to the portfolio as well, but the market has grown so much. The portfolio has gained 11%. 11% in the past 90 days here. The portfolio in general has grown 11%, and it has brought in $2,000, over $2,000 worth of profit in market gains. That's that 50% growth that I was telling you about from the market lows, because I was buying stocks aggressively when we had the coronavirus. I was buying stocks like every single day that the market went down, and because of that, it is the me buying those times has helped me basically grow my portfolio up to up by 50, as you can see here, 56%. 56% the portfolio has grown by, right, from the low here. So if we go back to 5 days, I'm not really worried about this little decline here at all. I'm not worried about it at all. If we look out a month, we look out 6 months, and it drops another like couple of percentage, 10%, maybe up to where it used to be like at this point, I will be a net buyer. If we see another pullback, I'll be a net buyer because I can see the kind of value that when you buy stocks when it's low, I can see it right here. I can see the result of that. I can literally see the results of doing that. You can buy stock when you buy stocks when it's cheap, when it shoots up, it's amazing. And then if we look here at the earned dividend in the past 90 days, the portfolio has earned $113. $113. If I was to have this money in my checking account, I mean, it's not really a lot of money. To some people, it might be a lot of money. To some people, this is like peanuts money. This is like chump change. To me, this is a lot of money. I'm just a regular person, just like you guys that you're watching this video. I don't think at any given time of my adult life I've ever had this much money focused, dedicated to investing. So I'm seeing real results in the past 90 days. That's the 1 quarter. The portfolio has earned $113 right here. $113 in the past 19 days worth of cash money that all these companies that I own, all these companies that are in here, worth of cash money that they literally dumping into my portfolio, paying me, right? So this portfolio has done really, really well in terms of earning money, and obviously in terms of growth as well. The past month, you see, it earned $46. In the past week, it earned $10. Although the market went down, it went down by 1.7%, which for me, that is okay. If next week the market takes a huge tumble again, and the market goes down another 2%, 3%. Once I can look at, let's say I look here at the 1 month view here, and I'm seeing the market is down by like 8 to 10%, I'll be a net buyer of stock. I'll be a net buyer of stock at that time. Right now, I'm not really buying. I'm just holding off. I'm doing my normal dollar cost averaging. I'm putting money into the market. My minimum amount of money that I put into the market every single week, I still put that into the market, which is roughly like $200 a day. So I put that in the market regardless of what happened in the market. But when I see an extra 6 to 10% decline like we saw here, when we see this kind of thing, 33% decline in the market, when you see this kind of numbers, you go in and you start buying stocks. This is how wealth is generated. This is how value is generated in a portfolio. As you can see in the past 1 month here, even though the market went down, we're still up 6%. In the past 90 days here, we're up 11%, $2,000 on the portfolio. In the past year, the portfolio has generated $120, up 16%. So something is working in this portfolio. I'm doing something right with this portfolio, and I'm gonna keep on doing it, and sharing every single week what I'm doing here. So I hope you understand what I'm trying to tell you, that no matter what happened in the market, dollar cost averaging is the way to go. When you see a downturn like this, which don't come too often, 33% downturn in the market, you don't panic, you buy some more, because this is where value is created when you're building your own portfolio. So from the top here, this is only 4%. This is the 4% decline from the top, right? And I'm not worried or scared about this 6% decline. I just thought, let me point that out to you guys. So the other thing that I wanted to point out here is diversification, right? When people say diversify and not put all your eggs in one basket, it makes sense. It makes sense to do that. And for me, I even take that to the next extreme, right? I'm not only just investing in individual companies, I invest in ETFs with individual companies. And at the same time, the ETFs that I invest in are focused on different things. Like for example, this ETF is focused on gold, Coca-Cola is focused on Coca-Cola, Johnson and Johnson is focused on Johnson and Johnson. They focus in their business, and I have companies that are focusing on different fields, right? So I'm very well diversified with the portfolio. I'm never worried about a 10% decline. Even if we have a 50% decline, I'm not worried about it, because no one company have enough of my money in it that can make me go bankrupt, that can damage my portfolio. Like the money is spread out across different fields, across different industries, across different countries. So most of this investment here are basically solid. You know, they're solid. They are I don't even know what to call it, but most of my investments, as you can see, I'm very well diversified in index funds, ETFs, and individual companies, right? Even the ETFs are diversified, biotech here. You know, I just spread my money around. I don't put all my money in one company. You know, I'll spread my money around. I mean, my biggest conviction in most of the companies that I'm invested in, the ones that I'm putting most money in right now is probably the tech stock, the Amazons of the world, the Teslas of the world, the Apples of the world. You know, so I like those companies. They get my extra money, but I do dollar cost average into the market, and that's basically what I do. I've learned that dollar cost averaging works, and I'm a big believer in averaging into the market over time. As we can see here, as you can see with the S&P 500 over time, if we look at 5 years over time, if you bought into the S&P 500, you would have been up 85%, right? So over time, the market tend to go up because in general, America is a very innovative country, and over time, our stock market tend to go up. So do not get scared about this little, we're seeing like a little 5% decline over here. You don't have to get scared or be worried about the holdings. It's just not significant enough to be worried about it. As you can see with my portfolio here, I'm not worried about it. As you can see with my M1 holding here, I'm not worried about it. I'm even a net buyer. As you can see here, this is how I average into the market. Every day I go in, I buy a little bit of Tesla, because Tesla is my biggest conviction right now in the market. I think out of all the companies in the market, Tesla is probably still the cheapest. So that's my biggest conviction. So I go in, I'm buying every day, whatever money I have available in cash, I go in and buy a little bit of Tesla. I go in and buy a little bit of Tesla. Sometimes I buy a little bit of Apple, you know? So I just diversify that way, because as you can see here, it's worked well for me. You know, it's worked well for me. Even though the sharp decline that we saw, all the industries that I've been invested in, they pretty much have been up for the past year. I mean, the big one here is energy, and it's basically Tesla. Tesla is holding that up, and I'll still keep buying some more Teslas. If you guys know, I'm a big Tesla bull. So if I pop right in here and filter by activity here, as you can see, each of these companies, these are all ETFs and individual companies. Visa paid me twice here. I don't know why. Maybe they did a special dividend or something. They paid 30 cents, and then they also paid 9 cents. The gas station here, they paid 2 cents. Pfizer paid 56 cents, 9 cents here. And yeah, this is how the money comes into the portfolio. In another like 5 years from now, this is not going to be 5 cents. It's going to be $1, $2, because I'm going to keep on buying into the market. No matter what goes on in the market, I'm going to keep on buying. I'm buying in. As Starbucks here paid 18 cents. Royal Bank of Canada paid me 48 cents, and then they took their taxes out. They took their Canadian tax out 7 cents. Same thing with National Grid. They paid 35 cents and they took tax out. Abbott Lab paid 3 cents. So this is how the money comes in. These are my monthly ETFs here. This one paid $13. This one paid almost $1. 97 cents. This paid 86. So like the money comes in bit by bit. Aflac paid $1. So the money comes in little by little, and I just don't worry. I just put money into the stock market, and over time, my goal is to just keep on collecting all this dividend. Just keep on collecting the dividend, and that's the main thing. When I started this portfolio, like if you guys go back to my previous videos, I'm gonna put up the playlist so you can see it. It probably will pop up right now. When I started this portfolio, the goal is for it to generate passive income. For me, this is my ultimate goal. For this to get to a point where it can replace it can pay off my bills every single month. This is the main goal here, for the portfolio to be able to generate enough money to pay off my bill. If I pop in here, I see, whoa, okay, enough money came in to pay off my bill. That is the ultimate goal for this portfolio. And whether the market goes up or it goes down, it don't really matter in the long term, because most of these companies are very strong companies that they've been in business for a long time, and they're still going to be in business, and they're still going to be paying their shareholder out of their profit. So that is that. So let's get into a little bit of the news. Let's get into a bit of the news here. Don't forget that the U.S. have what we call the Federal Reserve, and this is the government slash quasi independent entity that basically look after the U.S. monetary policy. And what I like to do is, when the market is going down, I like to go and look at what the Fed is doing. What's the unemployment rate in the US? And at the same time, the people that are in charge of the US dollar, that are in charge of money, right? This is the Federal Reserve. This is their website. They are in charge of monetary policy in the US. They're in charge of the money in the US, right? They're basically in charge of the dollar. They're in charge of the global dollar supply. They're in charge of the dollar. If you go here and look at 3 months, you know what? Let me look at year to date. As you can see here, during the coronavirus, the Fed's balance sheet went from 4 trillion all the way, it topped up to 7 trillion. So the Fed pumped about 3 trillion into the market, right? Sorry about that. So if we go to year to date here, during the coronavirus, that the stock market was going down during the coronavirus time here. Let's see, year to date, during the coronavirus time, that the stock market was going down, right? Guess what the Fed's balance sheet was doing? The people that are in charge of money, right? Their balance sheet started going up. And this is the thing that the stock market people don't get. The stock market can go down, but guess what the Fed's balance sheet is doing? It's going up. Something is happening to that is causing Fed's balance sheet to go up. They're either buying government, they either buying asset from the government, like buying treasury notes. That means lending money to the US government. That's why everybody is able to get a stimulus check because of this going up. They are either lending money to corporations for them to be able to pay their bills. Companies can create bonds as well. Bond is simply an IOU. It's like you writing a contract saying, hey, Federal Reserve, I'm going to pay you back this money in like 20 years. Just give me some money right now. Let me use it to operate my business, make sure my business is good and I can make money. So when you see the stock market go down around this time, and the Federal Reserve, their balance sheet shoot up, it means something. It means people shouldn't probably be worried about the market going down. So that's my theory. That's my thesis on this, right? I might be wrong, but this is my thesis. If I look back into my portfolio, it definitely has served me well. In the past 90 days, the portfolio has generated $2,000. So this thesis has actually it makes sense. It makes sense because during this time when the market was down, the Fed's balance sheet started going up. So let's go to 6 months. So it came down a bit. It came down a bit, right? It ended up being at like roughly the low 7 trillion, right? It came down all the way down here. So it's like right now. So what is this? July 8th. If you go and look at the S&P 500 here, let's look at the past month. Since the 8th, right, that the market has gone up even here, so let's look at this. Since September 2nd, that the market has gone down. Let's look at the Fed's balance sheet since September. They haven't updated this, but as you can see, it's been going up lately. It's been going up, and it's kind of pointing upwards. So we'll wait and see what will happen with that. But as long as the Fed keep buying stuff, the people that are in charge of the monetary policy in the US, as long as they keep buying stuff, the stock market will end up keep going up. And as long as the stock market keeps going up, it's good for regular folks like you and I that we have portfolios like this, and we can watch it grow over time. When the market goes down, remember, it's always a good buying opportunity. Do not be scared of the market going down. It's always a great buying opportunity. So another big news to cover is the unemployment rate. This is the official document from the US government telling us about the current unemployment rate in the US. So in August, the US gained 1.4 million jobs. So this is technically a good news. This is a good economic indicator for just people in general. As you can see, the data here from during the coronavirus, it just went straight up. About 14% of the economy, of the workforce in the economy didn't have a job. Look at this. Boom, it went straight down here. And here, as you can see, slowly but surely, the unemployment rate is going down. So these are good numbers to keep an eye on. These are really good numbers to keep an eye on. So I will keep an eye on this as we go along, and hopefully next month as well, I will do an update on this, just so you guys will be updated on it as well. But our unemployment rate is going down in the US. It's 8.4% now, and the US has gained US has gained 1.4 million new job. I will leave this article in the description if you wanna read it and check it out yourself. Also wanted to highlight here is news like this. Zoom, as we all know, because of the whole pandemic, literally everybody else have to like work from home. what this means is fundamentally the US has basically leaped forward in terms of the adoption of technology by like maybe 10-15 years. So companies like this, Zoom, were a huge winner. They were a huge winner. And this is the kind of things that I like to look out for in the market, right? This is the type of things I like to look out for. Zoom were a huge winner. They basically their profit jumped 92%. 90 the profit, I mean their share price, sorry, the share price jumped big it dropped big time, you know. So I was able to make a lot of money on this earnings call, I mean on this earnings play. There are going to be companies that are going to be winners doing this, and there are going to be companies that are going to be losers. At the end of the day, us as an individual, we don't know which companies will be the biggest winner or the biggest loser. That's why I take the effort to be fully diversified with my portfolio, right? So as you can see here, companies like Zoom is benefiting, Walmart is benefiting from this, and then so much more. Tesla also benefited. They just raised $5 billion. Can you imagine what Tesla would do with $5 billion? They can build 5 new factories. They can, do so many things with this money. So amongst all the chaos in the market, this is the point that I'm trying to make to you guys. Among all the chaos that we've had in the past couple of days, there are companies out there that are doing good. Like Tesla right here, they sold some shares at a high price, and they were able to raise $5 billion. Look at Zoom here, where their stock jumped. Their stock jumped so high. So there are opportunities in the market. I won't be bothered and be scared about any small particular thing. Just stay focused, be diversified, and you will be just fine. The link, here's a link of one of the trades that I made, the Zoom trade I was telling you about. I made over 6,000% on this trade. 6,000%. Can you imagine that kind of a number? 6,000%. So for those that don't know, this YouTube channel has an IG page. It's called Trade Like Bada. That's the YouTube channel that's the IG Instagram page for this YouTube channel. So I urge you to go check it out. I post my trading gains every single day on it, wins and losses. I post it every single day. So please follow the page. Trade Like Bada. There's a lot of gems, not germs. A lot of gems there, and you will be able to learn so much about trading as well. I want to give you a shout out to all the people that have been commenting in the comment section on the video. I appreciate you guys by interacting with me, talking, and getting to know what I'm doing here. I appreciate you, Sterling Thomas. It has been great. He's asking questions. He's learning more. So we're having a conversation about trading, about investing, about everything. So this is a community where we can learn from each other. If you have any question, leave it in the description. Maria too has been great. We've been having a conversation. So yeah, if you have any question, leave it in the comment section. And with that being said, I'm going to call it a day, and have a good night. I will see you on next week's update. Thank you.